So, markets really didn't like what they were seeing heading into the weekend. Hey everyone, it's Saturday morning, March 21st, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Now let's break down what happened yesterday. US stocks sold off pretty sharply, and honestly, things accelerated into the close. The Dow Jones fell around 0.9%, the Standard & Poor's 500 dropped about 1.5%, and the Nasdaq led the losses, down roughly 2% after a pretty weak session on Wall Street. So what's driving all of this? Well, geopolitics, once again. Markets reacted to reports that the US could be considering a move to seize or blockade a key Iranian oil terminal. The idea would be to put pressure on Iran to reopen the Strait of Hormuz, which is obviously one of the most important energy choke points globally. Now that's a pretty serious escalation scenario, and investors didn't take it lightly. At the same time, oil markets were all over the place. Prices were extremely volatile but still elevated. Brent crude was trading near $105 per barrel, while West Texas Intermediate hovered around $97. And here's the key point. Even with the swings, oil is staying high, and that's keeping inflation concerns alive in the background. On top of that, the broader trend isn't looking great either. US equities have now declined for the fourth straight week, and both the Dow and the Nasdaq are getting closer to what we'd call correction territory. So yeah, risk-off mood, rising geopolitical tensions, and sticky oil prices. Not exactly the combination markets were hoping for. Let's see how this develops going into the new week. Alright, that wraps up today's Capital Markets Quickie. Join me again Monday morning for more market updates. See you then.